What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. It really helps the channel grow, and you want to be alerted when we do release the bonus content that we drop from time to time. Thanks again to all those who continue to tune in, and welcome to all those who are new to the channel. The nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades from, ranging from, scalps and intraday trades all the way up to swings or leap trades. So if you want a deeper dive into how we set up the charts for these triggers and targets, make sure you check out the bonus content on our YouTube page. It's got a couple of videos that dive deeper into that for you, going over broadening formations, levels of support and resistance, things of that nature. But yeah, I encourage you to watch the full video. We go through triggers and targets on all time frames, so there's some pretty good insight that is that we give out here. So let's go ahead and take a look at the nightly video agenda. First, we'll recap the price action from today, Monday, March 23rd, before we zoom out like we always do and take a look at the week, month, quarter, and year. Keep ourselves level set and not too zoomed in on our view. And then we'll zoom back in to set what we call our 4-hour markers and our triggers and targets for Tuesday, March 24th. We'll also do a quick review of the triggers and targets for the month, quarter, and year as well. I guess the week as well, the week, month, quarter, and year. But anyways, let's go ahead and get into today's video, starting with the 5-minute chart like we normally do. There we go, 5-minute chart. This is how we take advantage of our repeatable strategy for early morning scalps or early entries into longer day trades. The rules for our strategy are quite simple, right? We look for the opening print, which is the first traded price of the day. If we get higher lows at or above opening print, we want to look to get into calls targeting overnight high and previous high day. If we get lower highs at or below the opening print, then we want to look to get into puts targeting the overnight low and previous low a day. So we had pretty big range overnight, right? The announcement or whatever by the president I think it was maybe like 6 a.m., 6:30 Central, that the war was over, or at least for 5 days, and he talked with Iran, right? That really sent the market skyrocketing. Excuse me. So we had a big gap per se, right, in quotes, right, from where price actually closed on Friday to where we opened, right? We didn't gap up on the day, right? We didn't open above Friday's high, but we did gap up substantially from where Friday closed. So what that leaves us with a lot of times is overhead supply, right? That correction, there could be a correction to the downside, for those overnight traders that, may take profit or whatever in the morning before we really get that push to the upside. So there is that risk. But because there was such a big range overnight, kind of gave us flashbacks to, what was that, early last week, late the week before, where there were 3-4 days in a row where you had to be in there on the 1 minute due to big moves overnight in order to really catch the very first move of the day. And so that's what we did here today. We just applied our rules, looking for higher lows at or above opening print. So normally, we do start out on the 5, but today, it was a little bit special, so we went ahead and started out on the 1 minute. And if we go to the 1 minute, we can see we did slightly violate our rule, right? But again, if you're familiar with this channel, you know that the rule has some nuance to it. And the more comfortable you get playing, using the strategy that we use, you can apply some of that nuance, right? So we had opening print. Where's our opening print button? Did I go back too far? Oh yeah. Come on, Thinkorswim, help me out here. Oops. Here we go. Oh my goodness, what just happened? Too small a time frame. Okay, so here we go. Back to today's open. So if you were on the 1 minute, like I said, you had to use a little bit of nuance, but it was there for you, right? We had the higher low right here. Not above the opening print, but we'll call this at, right? It's slightly below and at the opening print. So we got the higher high, obviously, in comparison to Friday's, the high at the end of the day on Friday, right? Or the last high that had the 2 down after it was here. So either way, higher high up here, higher low. We went ahead and entered when this 2 up went above the high of this 2 down, locking this 2 down in as a higher low. Make this a little bit bigger for those who might be on phone, right? So here's the open this morning, right? We got the slight push down, little leveling off, push up just above opening print, fell below. So technically, no, that's not a lower high. That's a higher high in comparison to Friday, right? Sorry, we got the higher low here, and then we entered. We ended up getting the higher low right at opening print. Again, this is just a soft higher low because it's an engulfing candle, but we did then get the higher high, and so we at that point went ahead and switched to our 5 minute, right? Don't want to get caught up by too much noise on the 1 minute and flushed out too early. We know where our stop would be. Obviously the low of the day at that point in the morning would be our stop. Oops, there we go. More specifically, if we got back to the 1 minute, there was a stop a little bit higher where that higher low was. But either way, just around opening print essentially is where your stop would be, slightly below if you want to give yourself a little bit of room. But then on the 5 minute, you see we pushed up and got the higher low. Now, one thing we want to take note of is we're at previous high a day and overnight highs right here. Those are the targets for the move when using that proven and repeatable strategy at the open, right? Higher lows at or above opening print. We're targeting overnight high and previous high day. That's it, right? So from that standpoint, you could have went ahead and sold here, or sold most of your position and left some runners. But you want to take into account, you see this gray dashed line going down diagonally to the right slightly here, this orange dashed line going down slightly to the right here. That is the daily downtrend line and the 4-hour downtrend line, right? So while we did pop up above it, we ran into last week's high. So we've got overnight high, previous high a day, 4-hour downtrend line, 1-day downtrend line, and the last week's high, all acting as resistance, right? And we've seen how intraday those act as resistance plenty of times in the past. So it's more than reasonable to watch for some type of higher low up around this level for a push back to the downside, even if it's just to make a higher low on, the 15 minute or the 1 hour or the 4-hour time frame, right? This is just playing purely positional trading, right? So based off of the position of all of these resistance lines, it's reasonable to expect a push to the downside. And that's what we got, right? So we got this higher high, so higher low, higher high, and then pull back. It did end up getting a higher low here, but pushed up and made the lower high. So as soon as we made the lower high, as soon as this 2 down locked this in as a lower high, right? Once we went below this price level, we went ahead and stopped out, right? So decent amount of profit here, right? We were in the money on those calls. We knew we were in the money and we were ready to have a quick trigger because we knew where we were in relation to, the levels of resistance here. So very happy with the calls that we got, but because we had the lower high right at all of those levels of resistance, this is where, we're no longer looking at that proven and repeatable strategy that we talk about for early morning scalps and early entries into day trades. But now we're looking at the positional trading and just things like lower highs, right? So we made this lower high, got out of the put. We went ahead and decided that if we drop below that lower low, so lower high, if we go below that lower low, automatically that we're going to have a lower low. So that would, start a downtrend. So we went ahead and grabbed some puts here, right? So grab some puts with the lower high. I don't think we had anything on the 15, but yeah, we took that down and, the bottom kind of fell out there. Weren't really expecting that. We're looking for, personally, I was looking for some type of lower high at or around this opening print level. If we were going to continue to go to the downside, if not possibly getting, going up, making a lower high and then a higher low just to get that push back to the upside with the momentum that we had from overnight. But, this market is very sensitive to headline news, and at that point in time, Iran had come out and said, we haven't talked to anybody, we haven't made any agreements with anyone. So we just had that fall through there, almost made it to last week's 50% level, which again is another important level that we talk about every week. Did bounce up, got the lower high, pushed down, made a lower low, lower high. So figured, okay, we might be getting ready to break the 50%, last week's 50% level. But as we could see, we came down here, made a higher low. And once we went the green 3 here to lock this 2 down in as a higher low, we went ahead and exited our put positions and did leave one runner, right? A lot of times we like to leave multiple runners, at least 2 to 3, but decided to go ahead and, with everything that's going on, just leave one runner. Got put out. Let's go to the 1 hour. There we go. Went out to the 1 hour, and we saw that we made this lower high in the last hour of the day, going 2 down, locking in that 2 up as a lower high. So gave us a little bit of confidence to stay in that runner. So we do have the runner that we're swinging overnight. We are technically in a downtrend on the 1 hour. Let's get the right tool out so we can show that. Right, high to lower high. That is, oops, goodness me. Come on, what's going on? There we go. We do have the lower high here. Let's get the right colors for you. What's going on with my computer? There we go. And we can see, right, here is the 1 hour broadening formation that we had coming into today, and actually that's narrowed down a little bit. So if we go high to high, right, we've got the broadening formation kind of squeezing in a little bit, which plays a little bit more in line with this 4 hour broadening formation that we have here as well, right? So technically the 1 hour still is in a downtrend, but for SOXL, unlike QQQ, it did make a higher high on the 4 hour, right? So let's get a little bit better chart out here, but we can see here on the 4 hour, we had the high, which was technically a lower high, but then had a higher low, and now we made a higher high. So if we went lower high, higher low, we would expect consolidation, looking for another lower high, higher low, continue consolidate until we popped. But it looks like here we're trying to pop, right? So we got the lower high, but the higher low and a higher high. So higher low, higher high, trying to start an uptrend. If in fact we do, pull back in that first 4 hour tomorrow, or just overall tomorrow, if we pull back but don't make that lower low, then there is still a possibility that, we get the higher, higher low, and then try and make that push again for another higher high, really locking in an uptrend with the higher low, higher high, higher low, higher high, right? Even if that does happen, we've got the levels of resistance we talked about before, last week's high, the flip for the month, you got the gap, you got a daily broadening formation running through here, you got a 4 hour broadening formation run through here, right, as well. So, again, even if we do put in a higher low on the 4 hour, or even lock in a higher low on the 1 hour, to start turning the 1 hour trend around, there is, we still got to watch out for this resistance up at the it's $58 area, right? But yeah, that's what we have for today. Broadening formation on the 4 hour, starting a slight downtrend on the 1 hour, respected the daily downtrend line and the 4 hour downtrend line. Although we wicked through it to make that higher high, we don't yet have an uptrend on the 4 hour. So I'm going to keep that 4 hour downtrend line in here. If we make that higher low, then we'll look at removing it. If we make the higher high after a higher low, then obviously that'll be removed. The 1 day downtrend would be removed as well, because on the day chart we would have made a higher high and a higher low and a higher high as well, right? So that's really what we've got from today. Not a whole lot more that we can say past what we've been saying for the past 3 weeks really. Patience is the key, and play that intraday volatility, because that longer time frame volatility trend just isn't there, right? So you can see we're in this smaller range at the bottom of the larger range that we've been in since the beginning of January, right? So we're just really trying to see, are we going to put in that low and get back to the top of the range, or are we going to fall back through here, maybe close this gap and bounce, then come back up and get some type of lower high on the day time frame or something like that to get that larger push to the downside. That is still a possibility, but technically we have put in this higher low, higher high on the day chart. So we'll have to see what happens, moving forward. Again, very headline sensitive market right now. So you don't want to get too far ahead of yourself with any of your positions on SOXL specifically right now. If you're playing other Tickers, because this strategy that we use can be used with any ticker in the U.S. stock market. If you're using other tickers, then you could have some other setup that will give you more, long term, gives you a better feeling about the long term, or you're currently in a trend and not ranging, right? That could be the case. But for SOXL specifically, patience is really going to end up continuing to be the key. Looking at the week, this brings up something interesting. We talked about this in the weekend video. I hope you were able to watch that. But we had an inside week last week, which leaves this week as kind of a wait and see week, right? Yes, we got the 2 up, but look, it's already failing, right? We're back below where the week opened. We're an inverted hammer. We've got the wick up top. So if the week were to end like this, then, it would probably be expected that we're going to get a 1, 2 up, 2 down reversal the following week to go back down here to the low of the candle to the left of the 1 and testing that gap again, right? Now, luckily, it's the first day of the week, so this could easily be turned around. We could easily push back up, go close this gap up here, close towards the market maker's expected move high for the week, maybe test last month's 50% level. That could be the case. At the same time, not only could we be setting up a 1, 2 up, 2 down, if we just go bearish the rest of the week, this could turn into a bearish engulfing candle, right? We went 2 up, we went above last week's high, but if we just put in downside pressure all the rest of the week and we go below last week's low, then now we've got a bearish engulfing candle, a soft lower high on the week time frame, and depending on how low we go, we could be setting a soft lower high with a lower low. So at that point, now we're looking at any 27s you may have left, still up 500, 600, 7% from the April lows. Then you probably want to get rid of them. 28s, depending on what position you're in, you probably want to get rid of those too. If you're already negative, hopefully you shouldn't be unless you were bought at the top. Then I would probably go ahead and get rid of those. If you're very positive right now, 200 up 100, 200%, depending on where you purchase them. They were released not too long ago. I believe we have one that's like up 168%, one's up like 188%. But anyways, if you're up, more than 100% on those, maybe you just go ahead and take the profit. Just set that aside. You can always re-enter the contract. It's not like the contract disappears once you sell it. But maybe you just protect that profit in case we do have that bigger pullback coming off a lower high on the week. So again, the week, you got to be patient. And another reason why you have to be patient is because this week is going to roll into the month, and the month we have a decision needs to be made as well, right? So we went 2 down on the month, right? We went 2 up, 2 down, but we ran that STRAT to magnitude, right? The magnitude of that move is the low of the candle to the left of the 2 up, which was right here at what's this 40? Where we go? There we go. 45.13, right? So at 45.13, that was the magnitude of the 2 up, 2 down. We ran that completed, but because we went slightly below that 45.13, that brings into play this 1 combo 2 down. I'm sorry, 1 combo 2 up, 2 down, and the magnitude of that move is all the way down here at 28, right? So we want to continue to see, if you're a bull, you want to continue to see price either maintain its location or push up. It would be best if you could get back above the opening print for the month, turn the candle green. That would look a lot more like this month is going to be a higher low in the long run, rather than being the start of a 1 combo 2 up, possibly combo 2 down, STRAT reversal if this drags its feet into April, right? So just be aware of what's on the board. If we do continue to push down and we get back below that 45.13 level, we're really kind of targeting 28 at that point, right? Now, could something happen like, we finished 2 down, we even triggered the 1 combo 2 up, 2 down again, and then in April, we put in a hammer, making some type of higher low without reaching magnitude? That's very possible, right? Not saying that it has to go to 28 if we go below the 45.13 level. But at that point, you're going to have to be a lot more careful with how you're playing things, looking for that higher low, right? Patience is just going to continue to be the key. And the main reason why we're looking at that is because there's nothing left on the quarter, right? If the month goes higher low here, then we're looking at continuing the uptrend on the month chart, trying to go for those all-time highs. If it does go down, then again, we're looking at the 28. But I say that because, the quarter and the year have run their strat, right? If you're familiar with this channel, you know what I'm going to say, right? We had the 1 combo 2 down, combo 2 up trigger last year. And then at, this quarter, it reached its magnitude up here at that 70.08 level, right? So quarter has run its strat. It needs something else to set up in order for, there's either going to be continuation or reversal. Either way, you've got to be patient on to see which one it'll be, right? We've got a week and a half left in the quarter, so a new quarter does start in a couple of weeks, so it could be a little bit sooner to see if we do get that 2 down. But if we're just going to continue up, then it could be some time before we even get a 2 up on that, right? So got to be patient on the quarter, and then the same with the year, right? The year ran the 2 down, 2 up strat, right? Last year went 2 down, this year went 2 up. Magnitude of that move is the high of the candle to the left of the 2 down, which again is that 70.08 level, and it ran its strat there. So nothing more from the quarter and the year perspective. It all really boils down to, is the month going to end up being a higher low, or are we going to continue with that 1 combo 2 up 2 down reversal down to possibly 28? But before we can, even figure that out on the month, we got to figure out on the week what's going on, because we're just in a broadening formation moving sideways, right? Are we going to get that lower high after the lower low on the week? If so, are we going to start that downtrend, or are we going to continue to push up and just continue to remain in this broadening formation, getting, targeting back at that $70-71, high of the range? And once we get up to that level, do we need to start looking at puts to go back to the downside and looking at the bottom of the range? That's really what we're looking at. But the name of the game here is patience. So apologies if you are a trend trader and you don't have the patience right now. Don't blame me. It's the market. I don't control the market. But it may be an exercise in patience for you. Start to learn to be a little bit more patient. Maybe put in a couple feelers every once in a while when we get to the bottom of the range or the top of the range to see if you can make the range play, right? But just, continue to get better every day in the market. But patience is going to be the key. SOXL has the tendency to, when it runs fast, it runs hard. But right now that's not what's happening, right? So be patient. Once it starts running in either direction, then you can hop on, start piling in, and make that trend trade move. But until then, we've got to play the range, right? So at this point, let's just go ahead and zoom back in, start looking at how we will attack tomorrow and get into our triggers and targets, right? So to do that, let's bring in our 4-hour markers. And again, those 4-hour markers are previous high a day, overnight high, previous low a day, and overnight low. Where's our overnight low? Oh, I forgot to update the overnights. So let's see, overnight, we're up about 0.3, so we'll say that goes up there, and activate, we'll say overnight low is just right around here. All right, so for illustration purposes, overnight high and overnight low are where they are, but as we know, those will move by the time we get to open on Monday. So let's see here, there we go. So on our chart, we've got our previous high day up at the top, overnight high, overnight low towards the bottom, and previous low day. All right, so if we do put in that type of range overnight, but then end up, let's say we open up slightly higher than, let's get the right tool up there. Say we open up slightly higher than we close. Let's say we open right back around where we opened on Monday or today, depending on when you're watching this. All right, so again, proven and repeatable strategy for early morning scalps or early morning entries into longer day trades. We want to look for higher lows at or above opening print to get into calls, targeting overnight high and previous high day. Or we want to look for lower highs at or below opening print to target overnight low and previous low day. All right, so that's the simple strategy. Now, if we go, let's actually pull up the 1 hour real quick. I like to flip to the 4 hour mostly because that's what we leave our triggers and targets on for the most part. But again, we are in this downtrend on the hour. So if we do happen to, outside of that proven and repeatable strategy that we have for early morning scalps or early entries into day trades, past that, now we want to start looking at location, higher lows, trend. If there is a trend on smaller time frames, that could, domino effect into those higher time frames. But for right now, again, we came from a higher high on the 4 hour, but we did, and we did put in a higher high on the 1 hour. I will say that, but by the end of the day, we had put in a lower high, right? So we do have that downtrend on the 1 hour. So watch for that continuation to the downside. This 2 up, 2 down, or one combo 2 up, 2 down triggered, and the magnitude is the low of the candle to the left of the 1. So previous low a day or Monday's low would be the target for that move, or the magnitude for that move. So we've got last week's 50% level right there as well. It could act as support once again, right? It's already used as support once this week. So if it acts as support, maybe we put in some type of higher low that could negate that lower high on the 1 hour, right? And from the standpoint of it's not a trend anymore, we're starting to consolidate, right? If we put in a higher low, until we put in a higher high, we're consolidating. But if we put in that higher low, look for us to break that 1 hour downtrend line, reattack opening print if that's where it's at, flip the week red, right? Because we got the week flip right there. Flip the week green, right? Then we're starting to look at, okay, now are we changing trend on the 1 hour? At that point, we've at least put in the higher low, higher high. Now we're going, are we going to test? We're going to go back and test that 4 hour and 1 day downtrend line again, right? So look for a little bit more chop here. Again, headlines, can spook the market or send them, straight up very quickly. So, if you don't have the time to put in, just to sit in front of the screens, definitely make sure you have solid stops put in place, or just, maybe stay out, right? Sometimes the best trade is to not trade. But that's what we're looking from the 1 hour perspective, from the 4 hour perspective, right? Again, like we said, we put in the higher high, and that's coming from a higher low. So are we starting an uptrend on the 4 hour? Even if we do go up, break previous high a day, again, we've got last week's high. We got this daily broadening formation, which you might not really be able to see, but you can see here that it was a high of a day and a high of a day. So high to higher high, we've got the broadening formation coming up through there, right? So the gap close, if we close the gap, we got the weak flip. Market makers expected move high is not too far above there as well. So even if we push up, watch for resistance. We could push up, make that higher high to start the trend, and then just kind of move sideways into the end of the day before we get some type of move overnight or on Wednesday to push us up even further or drop us back down, right? That could be the case. So on the 4 hour, watch for the 2 1 2 down reversal, right? 2 1, or continuation in this case, because it's already going down, right? You would enter at the low of the 1, the exit would be at the low of the 2. However, once you get to the low of the 2, that then does trigger this 2 up, 2 down, and that magnitude is all the way down here, close to last month's open. Excuse me, get my words right. With a low of 49 flat right down here, right? Now, if we continue to push to the upside, we get that 2 1 2 up reversal, enter at the high of the 1, exiting at the high of the 2, if you're looking at, just the 4 hour move there. But if we do, reach that, we do continue on up with this, this uptrend, shall we say, and probably looking to go and close that gap if possible, right? The gap open did reject us twice in the past couple of weeks, so it could be a rejection area again, but you would be looking to try and close that gap, at least get that off the board. But yeah, it could go either way on the 4 hour. I wish I could tell you more, but I'm not gonna sit here and lie to you, right? You got to be patient. On the 1 day, right? If we break below Monday's low, that then does trigger this 1 2 up 2 down. Again, the magnitude of a 1 2 up 2 down is not the low of the 1, but the low of the candle to the left of the 1. In this case, it's kind of lucky for bulls that it's not much further down, because a lot of times you can get a case where the low of the candle to the left of the 1 is substantially lower than the low of the 1, but in this case it's about right there. So if we do break below Monday's low a day, do be looking for a magnitude on that move down here at 48.50. Down here at 48.50. But again, you've got some support here. Last week's 50% level at 51.16. 50.76 is last quarter's high as well as last year's high. So that should act as some support for you as well. So look for a bounce there, even if we do get that 1 2 up 2 down. If we don't, that's fine. Just keep continuing to follow it down, but just know that is a pretty good support area. At the same time, if we go to the upside, again, it's just going to be a 2 up continuation. Got to try and fight through, 4 hour broadening formation, daily broadening formation, last week's high, week flip, right? So it's going to be quite a bit to break through. If we do, market makers expected move high is not too far from there as well. So, even if we go above Monday's high, just, don't get too far over your skis there. right? Let's go ahead and go to the notes here. We've been looking at charts quite a bit, right? So for Tuesday, March 24th, 2026, there will be 197 trading days left in 2026. And we know that the close on Monday, March 23rd was 53.03. What that means is that leaves us red on the week, right? The week opened at 54.21. So in order for the week to go green, it's got to get to 54.21. Now the month is red as well, right? For the month to go green, it's got to get to 58.15. But at the same time, the quarter and the year are green, which, because we don't have any continuity of the time frames, explains why we've got a lot of chop, right? We just sideways action. If these were all, if we had full time frame continuity to the upside, if all the time frames were green, then we probably wouldn't have this chop. If all the time frames were red, we probably wouldn't have this chop. We would probably be in a trending market. But until that happens, we're going to be in this choppy market, right? We know that if you watch the weekend video, the market maker's expected move for the week was plus or minus $7.99, giving us an expected range of 59.13 to 43.15. And we know that we do have that gap above that we were talking about not too long ago at 57.78 to 58.05. We've got quite a few gaps to the downside as well, so just want to make sure we keep those in mind. And we talked about from a scalping perspective, or an early morning scalping perspective, or an early entry into the day trade perspective, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. We talked about on the downside for the 4 hour, if we do get that failed 2 up, 1, 2 down, triggers at 52.96 and has a magnitude of 52.28, so not a lot of magnitude there, but that does then kick off the larger 2 up, 2 down, which has a magnitude all the way down at 49 flat. Now, because we know price can be choppy, we may not get all the way down to 49 flat. Look at 51.13 and 50.76 as possible levels to either bounce or go sideways, right? Now on the 4 hour, if we go to the upside, that gives us a failed 2 up, 1, 2 up, triggering at 54.45 with the magnitude up there at 56.81. Because we are in that 1 hour downtrend, we put an intermediate target of 55.36 there. If we break above 54.45, just in case we don't make it all the way to 56.81. At the same time, if we get some type of catalyst that drives us, gets us to 56.81 and still has momentum, we've got an extended target of 57.78 out there. On the day time frame, if we go to the downside, that gives us that 1, 2 up, 2 down, triggering at 52.28, magnitude of 48.50. Again, intermediate targets, just because the days can be kind of choppy. In case we don't get all the way down there to 48.50, it's about a $4 move there, so that's a decent size move. If we don't make it all the way, then we've got these levels as possible points of where you could bounce or go sideways, right? If we do complete the strat and we've got more momentum, right, we've got some extended targets listed out there for you as well. To the upside on the day, if we go 2 up continuation, that triggers at 56.81. No magnitude there because it's not a reversal, so we just have extended targets listed out here for you. All right. On the week, we did actually go 2 up on the week, just barely. That triggered at 56.48. We didn't quite make it to magnitude because again it triggered the 2 1 2 up. But it didn't reach magnitude at 57.78, so we are still shooting for that. If it does reach 57.78, that does kick off the larger 2 down combo 2 up with the magnitude of 62.82. Again, we've got intermediate targets on the way to that point in case we don't make it all the way there this week, or if we get some type of catalyst that sends us there and further, we've got the extended targets, right? If we go red 3 on the week, we've got to get down to 48.50 to trigger that. If we do trigger that, then we're looking at these targets on the downside. Never know what type of catalyst we can get. So with the type of market we've been in, we've got to have those extended targets out there. And again, on the month, we ran the 2 up 2 down strat to completion, which then kicked off the 1 combo 2 up 2 down. Again, that kicked off at 45.08. So we're back above that. It's no longer in force. That's why it's not bold. It's just underlined. If we get back below that 45.08 and re-kick off that 1 combo 2 up 2 down, then we'll put that back in bold, and then we'll be looking for these further targets on the way to the ultimate target of 28.12. Again, this may not happen this month. It may spill over into April, right? So we'll just continue to combine it. The targets won't move. The triggers will. That's all. But then, to finish things up, wrap things up, the quarter, we already ran the 1 combo 2 down, combo 2 up, and the year we already ran the 2 down, 2 up. So not much to look for there. We really just have to wait for things to shake on the week and the month, right? But that's what we've got for today's video. Those are your triggers and targets for everything from a scalping perspective all the way up to the 1 year chart. Try to jam in as much information as possible without taking up too much of your time. So if you did enjoy today's video, make sure you give it a thumbs up. Like we said, it goes a long way to help the channel, right? We don't charge anything for the information that we provide. And it's proven information, right? You can go back, watch any of our videos, back test anything that we've been talking about, and you can see how it works, right? We don't claim to be right 100% of the time, but with stops put in place properly, and the small losing percentage that we do have, it's this information could be pretty lucrative. So if you have been able to put it to use, if you've enjoyed it, go ahead and give us a thumbs up. We'd really appreciate it. And if you think this information would help anybody else in their trading, go ahead and give it a share. But that'll do it for today's video. We really appreciate you for dropping in. Give the channel a thumbs up, and we'll see you tomorrow. But we'll wrap it up like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday during the day, we hope you had some good rest last night, woke up refreshed this morning, and we look forward to getting out there and trading with you.